Thank you for joining us. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimezie Obi Iwawu. Thank you for joining us once again. On the show today, global debt hits record $233 trillion. Saudi Arabia converts the status of its national oil giant Aramco to a joint stock company with effect from January the 1st. Plus, Steinhoff CFO steps down as crisis hit retailer shuffles top team. We start off the program with the markets, and here on the African continent, the Nigerian Stock Exchange gains were seen across board at intraday, with the index entering into the 39,000 mark, up 1.09%. The South African JSE index was also looking up at intraday by 0.38%. Egypt is not trading today, but was down 0.34% on Thursday. Nairobi closed up 0.40% on Thursday. In the Middle East, markets closed all green on Thursday. Strength in the United Arab Emirates' biggest bank boosted Abu Dhabi's market. The Abu Dhabi index gained 1.50% as First Abu Dhabi Bank rose 1.4% to 10.80 dirhams, bringing its gains in the last 3 days to 5.4%. Dubai's index was up 0.14%. Most real estate firms remained firm, with Emma Properties up 0.5%. Qatar's index edged up 0.26%. Saudi Arabia's index was up 0.73%. Meanwhile, Saudi Arabia has changed the status of its national oil giant Aramco to a joint stock company with effect from January the 1st. This comes ahead of an initial public offering plan for later this year. The sale of up to 5% of Saudi Aramco, expected to go ahead in the second half of 2018, is a centerpiece of Vision 2030, an ambitious reform plan to reduce the dependence of the Saudi economy on oil. To Europe now, markets were high on Friday morning as investors await a fresh batch of economic data. Daniel Coop, my colleague in Frankfurt, is back to the market and has a lot to tell us. Hello, Daniel. Good afternoon and Happy New Year once again.
Yeah, good afternoon to you, Chimi. I guess it's never to say Happy New Year, so Happy New Year to you, your viewers, and your great team. It's great to be back, and I'm looking forward to many very exciting crossings now in 2018.
Sure, we're going to roll that happily. Anyway, kicking off the new year is the U.S. December jobs report. Is this the lightning rod for the global stock markets in this first week of 2018?
Well, I mean, I remember last year when we were talking, some days pretty much ago, when I was telling you that everybody here at the market was hoping for this Christmas rally that's usually happening at the end of the year with shares going up, but we didn't see this Christmas rally happening. Now, analysts are telling me that because of many factors, we are really seeing this rally happening right now, starting with the new year. Yesterday, the Wall Street in the United States closed with an all-time record of 25,000 points. Then Donald Trump said that he might be even seeing the Wall Street just in a few weeks or months ahead at a level of 30,000 points. So all of this was already giving lots of boost to the Asian markets. You were reporting it, and also to the European market, also the FTSE 100 in London with a new record today. So this job report that's going to be released within the next minutes, we are waiting for it here at the stock market, most likely is going to give shares another boost. Interesting question always, of course, like how, because Donald Trump is always kind of pretending that he is the one that's really bringing all of those shares up. And when you talk to experts, they're kind of saying that he's maybe a little bit too self-confident when it comes to this issue, because this rally that we have been seeing at Wall Street in the United States. We have been seeing this rally already during the past 10 years. And also we remember how many times we talked last year about how many times we saw shares actually dropping because of comments he made, because of reforms that didn't go through. So investors are not really thinking that all of this is because of Donald Trump. The only thing that they are telling me that has been really benefiting the market was his tax reform that he got through. Now we are waiting for the job report. Most likely it's going to be announced that about 190,000 new jobs were created. So this is most likely going to give shares another boost. So yeah, it's going to be a successful day for traders worldwide today, Jimmy.
Right. Coming from what you have just said, using your market in Frankfurt as a mirror for Europe, what will the U.S. versus European stock market look like in the new year?
Yeah, well, just imagine. I mean, Donald Trump said, 5,000 points. There's still this potential at the Wall Street. Just imagine Angela Merkel, German Chancellor, would say something like that. Then we would be at the blue chip index DAX level of about 18,000, 19,000 points. Investors don't think that this is going to happen. We remember that we were really struggling with this 13,000 point mark at the beginning of the year. The blue chip index DAX was actually already under the 13,000 point mark. Investors are telling me that most likely they're seeing the blue chip index DAX at a level of about 14,000 points. There's one concern that I can also share with you, and that's the election in Italy that's going to take place in spring this year. Italy, a country with lots of also political parties that are very skeptical when it comes to the European Union. Many of them have been also calling for Italy to leave the European Union. That's a big concern of people, how this Italian election is really going to develop, because of course Italy here in Europe, a very important member state of the European Union. But yeah, most of the big banks here in Germany, such as Deutsche Bank, Commerzbank, they are all seeing the blue chip index DAX level of about 14,000 by the end of 2018. Let's see what's really going to happen.
Sure, we'll look out for that. And a bit of corporate news there. Uber co-founder and former CEO Travis Kalanick plans to sell 29% of his stake in the ride-hailing service. Now, what is Kalanick selling down, and any link with a series of crises the company has been going through in some countries?
Yeah, that kind of came as a surprise also for investors. Uber so far has not released any official statement regarding this. Kalanick, the founder and used to be owner of Uber, he was still holding 10% of the company, a company, by the way, that wants to launch their IPO in 2019. Now we are hearing that he's selling almost a third, you just mentioned it, to a huge Japanese telephone company called SoftBank. We are hearing that he even wanted to sell 50% of his belongings of the company to that company, but at the end that was too expensive. For that amount that he is now selling at this 29%, he is most likely going to get an enormous amount of 1.4 billion euros. Yeah, and yeah, you mentioned it. Uber has been going through lots of crises. Kalanick, just stepped down last year because of problems within the company. He was accused of really creating a very bad and cold environment inside of the company. Then another big problem here for Uber in Europe, that the European Union was just ruling last year, at the end of the year, that Uber is here really considered as a taxi service and not as an app that provides drivers. So this is also going to mean that Uber is really going to have a much harder time here in Europe to get their services pretty much to the normal people. For example, here in Germany, Uber is operating in Berlin, but not as we know how it's operating, for example, in the United States with private drivers. Whenever you call an Uber in Berlin, what comes is a normal taxi.
Well, thank you very much, Daniel. The first week in January is gone already, so I hope to see you second week of January. Enjoy the rest of the day.